Hello, and welcome to Explain the Charts, your go-to channel for detailed technical and fundamental analysis. Today is October 9th, 2025, and we are diving deep into Meta Platforms, ticker symbol Meta. The stock is at a critical juncture. Analyst price targets are incredibly bullish, but the chart is showing signs of weakness after a significant pullback from its all-time highs. So, is this a massive buying opportunity or a clear warning sign of a deeper correction? In this video, we'll first break down all the conflicting news and analyst sentiment, then move to a multi-timeframe chart analysis to see what the price action is telling us. Let's start with the news, because the narrative around Meta is a tale of two cities. The bullish case is compelling, driven primarily by its transformation into an AI powerhouse. The company has posted incredible growth, with quarterly revenue surging over 21% year-over-year, and has consistently beaten earnings per share estimates for 4 consecutive quarters. This strong performance has led to a flood of positive analyst ratings, with a strong buy consensus and an average 12-month price target near $870, implying a significant upside from here. Some firms like Ever or ISI are even projecting a move to over $1,000. Fundamentally, the company looks solid with high profit margins, massive cash reserves, and a new dividend and stock buyback program. However, there are significant clouds on the horizon. Most notably, there has been a huge amount of insider selling over the past 6 months, with 353 sales and 0 purchases, which is a major red flag for investors. At the same time, the company's Reality Labs division is projected to lose a staggering $20 billion this year, and this spending is a persistent concern. Furthermore, there is new regulatory scrutiny from Washington over its generative AI chatbots and their potential risks. This mixed bag of strong AI growth versus insider selling and metaverse losses is creating a lot of the indecision we're seeing in the stock price right now. Now, let's see how this narrative is reflected in the charts, starting with the daily view. As you can see, Meta has been in a powerful uptrend for the better part of 2 years. The stock rallied from the $470s in May of 2024 all the way to a new all-time high of $796.25, which was hit on August 15th of this year. This peak, around $796, now stands as the most significant long-term resistance level. But let's zoom in on the more recent price action, because that's where the story gets really interesting. Since hitting that all-time high in August, Meta has corrected by over 10%, a pullback that coincided with the rising concerns about Reality Labs spending that we just discussed. The most important feature on this daily chart is the massive breakaway gap created after earnings at the end of July. You can see the price closed around $695 on July 30th and then opened the very next day at $775. This created a huge void, or gap, on the chart between roughly $695 and $775. In technical analysis, the top of such a gap often acts as a powerful support level on the first retest. And that is exactly what we've just seen. The sharp sell-off in late September and early October brought the price all the way down to a low of $690.51 on October 6th. The price dipped right into that gap, and buyers immediately stepped in to defend that level, causing a sharp bounce. This confirms that the $690 to $710 area is now the most critical support zone for Meta. As long as the price stays above this zone, the long-term uptrend remains intact. Now let's switch to the 1-hour chart to get a closer look at this recent battle. Here you can see that sharp plunge down to the $690s and the subsequent rebound. Over the last 3 trading sessions, the price has been consolidating in a very tight range, mostly between $707 and $718. This price action is essentially the market digesting the big move and deciding what's next. Bears might see this sideways action as a potential bear flag, which is a continuation pattern suggesting another leg down. Bulls, on the other hand, will see this as a base of accumulation, where smart money is buying shares at this support level before the next move higher. The key short-term resistance is the top of this range, around $718 to $720. A break above that would be the first sign that the bulls are regaining control. Flipping to the 15-minute chart shows this intraday chop even more clearly. We can see the back-and-forth battle between buyers and sellers right at this pivotal area. This is pure indecision, as traders weigh the bullish fundamental story against the bearish technical momentum and concerning insider activity. The resolution from this tight consolidation will be very telling for the short term. So let's bring it all together and discuss the potential scenarios from here. The bullish case is straightforward. The price has successfully tested a major support zone at the top of the July earnings gap and is holding. If buyers can push the price decisively above the current consolidation range around $720, the next target would be the former support area around $750, which will now act as resistance. A reclaim of $750 would open the door for a retest of the all-time highs near $796. Given the strong AI growth narrative and overwhelmingly positive analyst targets, I would assign a 60% probability to this bullish scenario, provided the broader market remains stable. The bearish case hinges entirely on the failure of this critical $690 support level. The heavy insider selling is the biggest warning sign here. If sellers break the price below $690 and we get daily closes inside that large gap, it would be a very negative technical signal. This could trigger a much deeper correction, first to fill the gap down to $695 and potentially targeting the next major support level in the $650 to $660 range. While a drop to the $500 level mentioned in one headline seems extreme, a failure at this current support would make a move towards $600 much more plausible. I'd place a 40% probability on this bearish outcome, a chance that would increase if we see weakness in the broader tech sector. To recap the key levels to watch, your critical support is the $690 to $710 zone. Your immediate resistance is $720, followed by a more significant hurdle at $750. The ultimate target for bulls is the all-time high near $796. The key event to keep on your radar is the upcoming earnings release scheduled for October 29th, which will undoubtedly be a major catalyst and could easily resolve this current stalemate. Watch for a decisive volume-supported break of this $707 to $720 range to signal the next move. That's our in-depth look at Meta platforms for today. I hope you found this analysis helpful and that it provides clarity on the key levels and potential scenarios for the stock. If you enjoyed the video, please hit that like button, subscribe to Explain the Charts, and share your own thoughts on Meta in the comment section below. And now for our disclaimer. This video is for informational and educational purposes only and should not be considered financial advice. Trading stocks involves risk, and you should always conduct your own research and consult with a certified financial professional before making any investment decisions.